Ladies and gentlemen, welcome back to the channel. Look at that, AMC Stock is in the green today. You want to know why? It's exactly what we talked about yesterday. Fed Jerome Powell, he confirmed something very important. We're going to get into it here in this video. We're going to look at all of the data for AMC Stock today, everything you need to know, including this crazy drop we're continuing to see in 10-year Treasury yields. Could this continue to have a positive effect on AMC stock, and maybe are we going to see a much larger effect on AMC stock here over the next coming days? So let's go ahead and get into it, guys. Hit that like button and subscribe to the channel. Let me know what you guys think of all of this information down below in the comment section. So first things first, AMC stock is up 3.08%. The stock is at $6.86 per share. Now, I think any green day for AMC is good, right? Especially coming off of this dilution that we have seen, and just where we are with AMC, right? Any good green day is very positive for AMC, because eventually, like we seen with the last round of dilution that happened back here, the stock kind of falls, it trades sideways for a while, it gets over it, you can see a rally from there, right? I think you're in the getting over it phase, and you're kind of just trading sideways here. Eventually, we'll get over it. We do want to hear something along the lines, preferably, that we're not going to get any more dilution for a while. The markets would love some kind of confirmation like that. I don't know if that's going to happen. I don't know if we're going to get that, but that's preferably what we want to see nonetheless. Now, what's actually happening today? The Russell 2000 is up 2.56%. Holy moly. The NASDAQ is up about 0.5%. The Russell is outperforming 5 times what the NASDAQ is doing. But NASDAQ stocks are doing well. Just big tech is not seeing the capital inflows. It's in the other names. It's a widening out of this market. That is what I've been talking about for a while now. You want to be in interest rate sensitive, high quality stocks. That's the simple fact of the matter. Stocks that have been improving over the last 2 years that are interest rate sensitive are going to be the ones that outperform in 2024. I've never seen something so obvious than this. Now, AMC, you can make the argument that AMC is a lot more quality today than it was years ago, right? The stock or company has been improving, has been getting better over the years, right? AMC just had its 2 quarters of profitability. This dilution situation is a big problem, and that's really the reason why AMC is where it is. I think AMC would probably be in the 20s right now if we did not see that latest round of dilution following last earnings. But nonetheless, what happened today? So Jerome Powell spoke today. This article is a little bit misleading. Says Fed Chair Powell calls talk of cutting rates premature and says more hikes could happen. Federal Reserve Chairman Jerome Powell said on Friday they pushed back on market expectations for aggressive interest rate cuts ahead. It would be premature to conclude with confidence that we have achieved a sufficiently restrictive stance or to speculate on when policy might ease, Powell said in a speech. However, the remarks gave some credence to the idea that the Fed at least is done hiking, as the string of rate hikes since March 2022 have cut into economic activity. Powell noted that inflation is moving in the right direction. Markets largely took Powell's comments as dovish, with stocks up and Treasury yields down sharply. What this really is, or was Powell's chance to correct the markets and say, nope, we're not doing anything close to what the markets are pricing in. We might have to raise rates again, to jawbone. Half of the Fed's policy of how they prep markets for Fed policy is by talking, right? By saying they're going to do this, committing to, some one thing, and then boom, markets are prepared for it. Well, check this out. Today, after Fed Jerome Powell, we're expecting a pause in December, a pause in January. Now there's about a 10% chance that the Fed cuts rates in January. Now the markets, for the first day so far, are now pricing in a rate cut in March with 51.8% odds. It's actually a 5.4% chance of 2 rate cuts by March. And there is a 40.4% chance of a continued pause. This is incredible. Now, by May, we're still only expecting 1 cut currently, but there's a 37.5% chance of 2 rate cuts by May. If we look all the way to December, markets are currently expecting 1, 2, 3, 4, 5 rate cuts. But now there is a 25.9% chance of 6 rate cuts. Yesterday, there was a 22.3% chance of 6 rate cuts in 2024. So markets are firmly pricing in 5 rate cuts, but you could see 6 rate cuts. There's a 10% chance of 7 rate cuts. There's a 1% chance of 8 rate cuts in 2024. That's exciting for stocks, for small mid-cap stocks. But I will say, typically when the Fed cuts rates, it is negative. But if the Fed communicates this and it's long forecasted that they're going to start cutting rates because inflation is falling, is that negative? I would say probably not. I would say that's the evolution of a soft landing. And that's what, that's what the markets are going with right now. So we definitely want to watch the economic data from here. We definitely want to watch how the situation evolves with the economy. But right now, it looks like avoiding a recession with lots of rate cuts in 2024. That's going to be great news for AMC. That's going to be great news for a lot of stocks that have not done well over the past 2 years. Interest rate sensitive companies, but quality. Remember, low quality stocks might do well for a period of time, but ultimately they're probably going to zero, right? So as far as deploying any new capital, I like a stock like a Fubo, like a SoFi, like a PayPal, like a Tesla, AMC as well. I think there's a place there for some additional capital, but if you're watching this video, you probably have a large position in AMC already. It might make sense to diversify a little bit into some other names. Those are some of the names that I like. Snapchat has done very well recently. Those names have been improving over the last 2 years consistently, and the stock prices have not reflected that. Those businesses are in a much better place today than they were 2 years ago, but the stocks are down 50 to 80% in that same time frame in the last 2 years. So that's important to point out. We did have ISM manufacturing data as well. That really wasn't a big deal at all today. The big deal, like I said, was going to be Fed Jerome Powell. That really wasn't a surprise. Manufacturing PMI came in a little bit light at 46.7. That was the same as the previous month, but you were expecting 47.6. So it came in about a point lower than expectations, or about 1 lower than expectations. You also heard from Fed Goolsbee. You got construction spending. You got ISM manufacturing employment, which came in lower than expectations. ISM manufacturing new orders, which came in way better than expectations. ISM manufacturing prices came in higher than expectations. And then obviously Fed Jerome Powell. So pretty decent day so far, I would say. Fed Jerome Powell is really confirming this rally. Again, this was his chance to reject this rally and basically tell the markets they're ridiculous and you should not be pricing in 5 or 6 rate cuts for 2024. Like, Fed Powell knows that. Fed Powell looks at the Fed rate monitor tool. He knows how many rate cuts are priced in. If he wanted to push that back, today would have been the day. He was actually joking around in a good mood. Some people are saying this was about as close to a victory lap as you could have gotten with inflation. Like, making jokes. Normally, one of the things he was asked specifically that sticks out to me, one of the things that he's asked quite often is, what do you do for fun, Jerome Powell? He usually says play guitar, go to concerts, music, things of that nature. He said today, a low CPI report. Yeah, that's a pretty good sign. Good reason for Treasury yields to fall 13 basis points today. It's like you're getting half of a rate cut today. So, yeah, that is great news. You're now at 4.218%, which, considering we were at 5% about a month and a half ago, yeah, that's a huge drop in treasuries. Now, let's look at some of the data here with AMC Stock now that you guys are kind of caught up on what's going on here on the day today. You have a cost to borrow max of 1.04%, cost to borrow minimum negative 0.2%, cost to borrow average negative 0.2%. Short interest of free float. Keep in mind, by me reading these numbers, I do not think they are accurate. I am not endorsing them at all. If you believe these numbers are accurate, well, a short squeeze looks highly unlikely. If you believe a short squeeze is coming or is possibly coming, you have to think to some degree these numbers are probably not correct in one capacity or another. Not financial advice. I'm not a financial advisor. That's just common logic. You have a short interest of free float at 10.69%, $140.58 million worth of short positions. Days to cover 0.92, 21. Why do I always do that? 21.14 million shares that are currently sold short, 15.38 million shares currently out on loan, cost to borrow 1.21%, utilization of 37.38%, and a short score of 58.31 out of 100. So again, not the most impressive numbers. If we look at the option activity, that is a lot more impressive. Today, you have seen 14 orders totaling $797,000 with a positive order value of 77%. That's a lot of sevens there. If we take a look at the volume, lots of sevens here as well. 75.77% calls, 24.23% puts. So you're seeing a lot of calls being bought as well. There is a 3-to-1 ratio for calls compared to puts. So there is a lot of calls, lots of calls compared to puts. So that's looking good as well. Now, as far as everything else, let's take a look at some of your commodities and what they're doing today. TLT is not a commodity. It's a 20-year Treasury ETF, probably the most popular one of all of them. That's up about 1.7%. This is also good for the banking industry, right? These unrealized losses mostly can be reflected by TLT. And you've seen the big drop since the Rona, right? This was the Rona. Treasuries, TLT was like 160, right? In the 140 to 160 range. Banks were flushed with cash. They had to deploy that cash into loans or treasuries. Nobody was really taking loans out at the time. The loan rate was very, very low compared to the amount of cash that was being injected into the banks. So they had to buy treasuries in this range, right? In the, call it 130 to 160 range. Well, TLT got as low as $82. So that's a lot of unrealized losses. If they hold to maturity, that's fine. If they have to sell beforehand, that is a big loss. That's why you've seen all the banking, crisis, meltdown stuff that we've seen in the beginning of 2023. TLT rising takes some pressure off the banks. USO is down another 1/3% today, just getting back to really where it has been over the past couple of days. We did get quite a rally for a couple days here on November 28th, November 29th, based on some of the rumors of the OPEC Plus meeting. We got the OPEC Plus meeting yesterday. Oil was down about 3.28%, down again slightly today. That's good news as well. The dollar is flat on the day today. Well, technically down about 0.1%, but almost flat on the day. Looks good. Looks like the dollar's continuing to trend lower, and overall that has been positive recently. Gold. Oh my gosh. Gold. Look at this. So I don't want to scare anyone here necessarily, but gold is higher than the banking crisis back in March and April. Why? Why is that happening? I really am having a hard time with this one because Gold is one of those things that reacts a lot of the time before the markets react, before your retail investors, before most people know what is happening or, what's going wrong out there. Gold can react, right? Kind of like before the Rona crash. Gold was kind of doing well for a while here and kind of seeing a breakout before everything, started. Even back in 2019, gold started to do really well. You could make the argument that maybe big money knew something during this time, and that was 6 months, 9 months before the Rona. Well, now you're breaking out again. For why? What reason? I don't know. There's no logical reason why this is happening. So definitely something we want to watch closely, but right now it's a little on the concerning side. I'm not going to lie. Now, total option open interest. You have a 1.27 million AMC options. Today, you have seen 131,000 for volume. In total, call volume 105,000. Total puts volume of 25.74 thousand. That means there is over 4 times as many calls being bought today on AMC than puts. That's off the chain ridiculous. That's crazy. That is just crazy. So yeah, some of the most popular strikes being the $7 call that has 33,000 for volume today. The $7.50 call is 29,000 for volume. The $9 call is 25,000 for volume, and the $8 call has 18,000 for volume. Some of the puts are not really seeing anything close to that. The $7 put, 7,000 for volume. The $6.50 put has 12,000 for volume. Everything else is way low. So definitely an interesting day across the board. I do think this could potentially continue a rally for AMC, or start a rally for AMC, at the very least stabilize this stock. That's my expectations. I don't think we're going to go lower from here. But again, I want to get above $7 per share before I make that ultimate conclusion. And really, I also want to know what's going on with gold. Is there something bad happening under the surface that we don't know about? The big money is, buying gold. Like, why? Why is that happening? Let me know your opinions down below in the comment section. In the meantime, hit the like button and subscribe to the channel. Thanks for watching. Enjoy the rest of your day, and I will see you in the next one.